Good evening, everybody. Hope you're having a good week or had a good week. Though we still got another day tomorrow, Saturday. Because if you're a college football fan, your week kind of starts or maybe ends tomorrow. I don't know how you want to look at it. I'm kind of a college football fan. I went to UConn and we pretty much suck, but there's some signs of life. So I'll be watching them tomorrow night. Anyway, let's talk about what is going on in the market and more importantly, what is there to pay attention to going forward? Because it's always like, okay, we could always look back and be like, oh, well, this was support and it became resistance. But hindsight's not going to make you money. So we can talk about what are we looking at going through this week. Now, as traders, we want to look for things that look like they're going to move. Right? If it looks like this is going to be neutral and not move, we're not interested. But let me just kind of go through the markets here, the most important things I'm watching. And believe it or not, well, actually, it's pretty easy to believe, but oil, inflation, and interest rates are all on my radar screen, and they all kind of coincide. So here's our S&P 500, and if you've been following us, this is acted at. You know that this has acted pretty much exactly as we thought it would, and it's really not what we thought; it's what the market told us it was going to do. Notice how we got this rally and we get up to here and we hit resistance. We get this large group of sellers. The buyers are pushing the market higher. There's not enough sellers or supply. So the buyers got to push prices higher. And what happens when we get up here? Oh, all of a sudden the tide turns. This is where the sellers kind of come out in force and put a top on the market. Now the buyers can buy all they need to. Why is there resistance at this level here? Well, check out back here. It was a support level. Support can turn into resistance. This is a fundamental principle of financial markets. It happens because there are investors who bought here who regret their decision to do so when the market goes lower. They tell themselves, if I can get out at break even, I'm going to. So you have these remorseful buyers who bought while the market was at support over here, placing their sell orders here. So if there's enough of these remorseful buyers placing sell orders, the level that was support turned into resistance. And that's what happened here. Now we see something else that has to do with these price levels. Knowing where these important price levels are is really one of the most important things you need to know. If you don't know where your levels are on whatever it is you're trading, it's like good luck, man. You're going to need it. Now, we go for a sell off, and where do we find support? Oh, how about that? Another price level that had been important was resistance over here, resistance over here. This is like the 443.50 level resistance. Now, why would a level that was resistance convert into support? We've talked about why support can convert into resistance because of buyer's remorse. Why can resistance convert into support? Seller's remorse. People sold. When the price goes higher, a lot of them regret their decision to sell. They say, if the market comes back to the price I sold at, I'm going to buy. So resistance can become support if you have enough remorseful sellers placing buy orders, and that's what happened here. So watch this level here, 443.50. I mean, we're right there, 445. My guess is that this breaks and goes lower, and I will show you why I think that. Well, forget all this talk about, oh, president's bringing down the inflation he caused and, blah, blah, blah. Yeah, whatever, man. I listen to the markets. I don't listen to analysts. I don't listen to gurus. I listen to the markets. Here's oil, right? Oil's made a really big move up over the last, I don't know, since here, August 24th, which was really not that far ago or long ago. Now it looks like we're kind of just taking a break. The buyers pushed it higher. They're like, all right, if we step out on the sidelines, maybe the price will come lower. But it hasn't. When you have situations like this where you get this big uptrend or a trend, it happens on the downside too, but in this case, you get this big uptrend and the buyers step away and the market hasn't come in. Well, that's the buyer's going to be like, okay, I stepped aside. I gave it a chance. I'm going back in. And then they could push the price higher. Now, my target over here is 93. As you can see, 93 was clear resistance back in October of last year and in November last year. There's a tendency of markets to hit resistance at former peaks. Resistance at a former peak, resistance at a former peak, resistance at a former peak. Psychology, everybody. Oh, let me get rid of this 10 months because that's a little confusing. This is crude oil, but this chart, uh, well, actually, it probably is 10 months. But regardless, so there's people who bought here and they're like, oh, the market went lower. This sucks. If it gets back to my price, I'm going to sell. Remorseful buyers placing sell orders at the level that was resistance can make resistance become resistance again. Here we have support turning into resistance. This is our remorseful buyers who bought here, trying to sell when the price gets back to their level. So buyer's remorse can keep resistance intact. Buyer's remorse can turn support into resistance. Resistance can stay intact because of buyer's remorse. Just like up here, every time we got up to this level here around 83.20, what happened? We hit resistance. Why would something get to resistance and sell off? Well, there's investors or traders who are watching this trend higher. They want to sell. All of a sudden, they notice the price isn't going higher anymore, right? Why do prices go higher? There's not enough supply or sellers out in the market. So the buyers have to pay higher. When the price stops going higher, it tells us new sellers are coming into the market. So some of these investors who want to sell, or traders, I really should say, get worried that they're not going to be able to sell. So they start undercutting each other. They know the buyers are going to go to whoever is willing to sell at the lowest price. So they want to be that lowest price. They want to miss it. So you get this snowball effect off resistance. The opposite is true with support. You get in traders who want to buy, they notice, oh, stop going down. Markets go down because there's not enough buyers. If it's not going down, there must be new buyers coming into the market. I better jump ahead of these other buyers because the sellers are going to go to whoever's willing to pay the highest price. So just like markets sell off of resistance because of sellers undercutting each other, markets rally off of support because of buyers trying to outbid each other. So oil to me looks like after a little bit of a consolidation, we're probably going to continue to move a little bit higher here. This is our CRB index, which is an index that I follow, which I think is a really good indication of inflation. It's much better than what these, let's just say, idiots at, I'm sorry, let's just, for lack of a better term, these fools at the Fed, look, man, I'm wrong. They're wrong. Politicians are wrong. It's never wrong. A chart. Chart is never wrong. And what does this tell us here? Whoops. Sorry about that. Let me do this again. Okay, so since June, this is an index that tracks a basket of commodities, is up 11.8%. So let's just be conservative. It's up 11%. So the government's telling us, CPI is 3.2. But yet commodities are up 11% in a matter of 3 months. You don't need to be an economist to know that when you go to the store, it's like, wow, I can't believe I just spent $100 and I'm leaving here with like a grocery bag that's not even full. So inflation here, all right, I think that this is going to put pressure on the Fed to keep raising rates as well it should. Frankly, if they knew what the hell they were doing, we wouldn't be in this mess. Or maybe they do know what they are doing and they just said there was no inflation or it was transitory for political reasons. All right, so now we're going to look at the interest rates. This is the 10-year interest rate. And once again, we can see signs of inflation. All right, we got up to the rates here back in October of last year. We're heading higher. Once we get up to 4.35, 4.4, that's going to get a lot of people's attention. That's going to be the highest rates in like literally like a decade and a half. Higher rates are bad for the markets. That's going to put weakness on or make the stocks weak. One of the things you can see here is how this almost looks like a stock chart, and it's an interest rate chart. And you might say, well, gee, Mark, how is it possible that an interest rate, which is like basically determined by the global supply of money, can have such precise levels like some of the other things we looked at? And the answer is, well, this is the inverse of the bond chart. So if we look at the bond, pretend this is the bond. Oh, people sold here. They regret their decision to do so, so they buy here. People buy here. They regret their decision to do so, so they sell here. Remember, it's humans who are trading these securities. And even if it's an algorithm, the evil algorithms, guess what? It's a person who hits the enter button. Okay. It says, all right, time for you to go start buying. So interest rates are determined by the bond market. The bond market, just like the stock market, for the vast majority of the time, is determined by supply and demand. All right, everybody. I guess I got a question here on Tesla. I always get questions on Tesla. I don't mind because I'm here to teach. But once again, we could see our perfect illustration of supply and demand or resistance levels. All right, so support became support here became resistance here. I mean, look at that. That right in itself is just a lesson of trading that could, with some other skills added, could literally make you rich. Being able to identify these important price levels. Support here became support here. Support here became support here. Support here became resistance here. Resistance here became resistance here. Resistance here became support here. Support here has become support again. Support became resistance. Remember, if you know where the important price levels are, it's like having a map to whatever it is you're trading. If you go into a town you've never been in before and you don't have a GPS, or if you're old like me and you don't have a map, a literal map, I actually like looking at maps. Maybe I'm weird. I actually have a couple replica maps of where I live, this Fairfield County, like from the 1800s, which are very cool. But anyway, if you don't know where the important levels are, good luck trading whatever it is you're trading, because you're going to need it. That being said, thank you, everybody, and I will hopefully see you soon.